Why do we want to use volume in our trades? Let's talk about this, okay? A lot of times we're going to be taking trades and let's say we're just focusing on price, okay? You might get consolidation, break, consolidation, break, consolidation, break, etc. And let's say you just so happen to enter here. As soon as we make this kind of support going on here, right? As soon as we make this kind of support and we break the high, you're going to immediately move your stop to here. Sometimes what will happen is we'll just break the high, come back down. Some people say sweep. I don't like that. I really don't like it, but we'll say it. We'll sweep the low, or what will happen is this wall that was here for the buyers have lifted, and we needed to find more buyers in this area, and then we'll break higher, right? So how do we know? How do we know where we can get the best risk to reward in our trades? How do we know stuff like this? Guys, this is where volume comes in. Okay, this is what makes volume so powerful. Is because if we have normal candles, right, like this, if we have candles trending up like this, okay, how are we gonna know which candle we want to use for our stop? Okay, because if there really is no way to know, if we're just reading the price like this, and obviously this isn't exactly how the market would work, right? The market doesn't just work like this. Sometimes you get gaps up, gap down, you maybe not even get wicks, but we're just going to do an explanation, right? How do we even know where something has changed? If price looks the same, okay? If price looks the same, how do we know which one is more significant or what has happened? That's where volume comes in, right? That is where volume comes in. Volume is a measure of interest. You have to understand. It's a measure of participants. It's not saying more buyers than sellers. It's not saying more sellers than buyers. It's a measure of interest. It's a measure of activity, right? So we know for a fact there was more activity in this candle, in this bar here. We know that for a fact, right? So when we go back and we say, oh, let's say I actually got long here. I was long here, right? We got lower volume than this candle, right? And now all of a sudden we're starting to hold. We might be starting to reject something, right? How do we know where to put our stop? Make sense? The way we would want to go about this is we have to think where the amount of interest is, because guys, interest is going to show you where there's a level, where there's support or resistance. Because if we don't have charting history, volume's all you have. You have to understand that. Who got taken out? Because if there were sellers here getting filled, right, by all those buyers, this is a level of interest that we can almost assume that if we come back down into, and it's a red candle, right, and we come back down into here, let's make these shaded ones red. We come back into this level here, we should more or less be protected by this candle here, because this was a level of high interest. We're higher than this candle, right? So obviously the majority of this interest was interested in paying higher prices, right? The majority of this candle was interested in making the prices higher. So they were buying the ask. Maybe the sellers were raising their sells, right? That's what made the next candle higher. Okay. So, welcome to another Dip Snipers video. I'm Teddy, and guys, I'm telling you, volume is your secret. I'm telling you, okay? We can look at price all day and we can make so many different conclusions, but volume tells you who and volume tells you when, right? Because price just might give you a more or less idea of where. But if we only know where, we don't know who and when, we don't know how quickly it's going to hit that level, we don't know how strongly it's going to bounce off that level. And I think those are pretty important, right? Because if we just look at support and resistance just by using price, we say, oh, there could be a level here. But if we didn't see the amount of volume that was there at this level, guys, we might not know if it's ever going to come back to this level or which candle exactly, right? And so let's dive a little bit deeper into it now. Okay, let's go into some actual charts. Okay, let's go and do some actual charting. I think that's enough for the analysis of just the concept wise why you need to be using volume. All right, 'cause sometimes, guys, price is going to look the same, but the volume is going to tell you that there actually is a difference. So let's use a random number generator. Okay, and just type in, we're just going to go back in history and just kind of replay, right? And just test this out. Just kind of test out what's going on just so you can see, right? There's no BS here, right? Volume is very important, guys. Don't get it twisted. So let's say we want to go from like 2000 to 2015, or let's go like this, 0 to 15. This is going to give us the year 2000. Well, does gold even go back to year 2000? Let's see. Don't think so. Let's see. Hold on. And we go to the year 2000. 2000 January 1st. Okay, it goes back to 2016. So that's fine. We'll just do 2016. Okay. And let's do the month of 2016. So 0 to 12. 7. Where is it again? So in 2016, we replay. Well, that's kind of cheating. I can kind of see. So we'll just start here. Okay. We already saw what was going on. We don't want to cheat. So let's just start here. Okay. We can see for a couple things going on. Okay. I know the random number generator thing didn't work, but that's okay. I promise you, I have no clue about what's going to happen. Okay. So we can make a couple inferences here, right? We know for a fact, I mean, we've got a nice volume candle here. We got a volume candle here, right? These two nice volume candles here, right? And if you would actually take a look at what's going on, prices are continuing to be pushed lower after these candles. Makes sense? So what does that mean? If we have a lot of interest, right? So let's say we don't have the actual data of who's more aggressive, like buying the bid or selling the ask, or selling the bid, buying the ask. We don't actually have the data of who's aggressive. How can we just read it in the candles, right? Well, we want to see the interest. The interest is the speed, right? The volume is exactly what it sounds like. The volume, the intensity. I want to see what happens next. What happens next? Are we taking highs? Are we making new highs after the candle? Are we taking lows? What's going on? So, and there's different theories. Like, I have a capitulation. I have a exhaustion kind of theory that we can use, and I have that in my other videos. But let's just keep it kind of simple here, bar by bar. What's going on now is we're pushing lower, are we not? We are pushing lower. So the last candle we have is this candle here. That's pretty high volume, right? And so far we have not failed the low of this candle here. Let's just make this yellow. Okay, we haven't failed the low of this candle yet. In fact, we almost took the high of it, right? So if I wanted to add to winners and take a risk on this trade and have a big excellent trade and but only, minimize my loss and maximize my gains, I would want to get tight risk to reward, nail the bottom, and add every time we create a support and move my stop loss up as we keep being protected by buyers, or move my stop loss down as we're protected by sellers, right? So let's look. How we're gonna do is, well, what happens? Okay, so look, we actually broke the high of this candle. So we know that whoever is protecting this high of this candle, they are gone. That was a great voice crack, but they're gone, right? I mean, look, we broke the high. So that's an indication of some weakness, right? We still haven't broke the low of this candle. So, but the candle's still relatively red, right? It's pretty bearish candle. So we might break the low of this candle, but for now, I'd say this is a good place to get tight risk to reward. So let's do it. Okay. Put the stop loss right at the low of this candle because we're pretty close. I mean, and broke the high of that previous candle, the high volume candle here. So I'd say this is a good place to get tight risk to reward. So let's do it. Let's see what we can get. And we failed. Good. So, well, not good, but I mean, I'm okay with that. That was pretty tight risk. All right. So let's continue here. See if we can get another high volume candle that we can play off of, right? Because remember, these volume candles give us levels. You have to understand, if we have no history, volume is going to tell us where the level's at. Right? If we don't know support or resistance and anything, volume is going to tell us where the level's at. Right? We don't need to see left. We don't need to look right. We don't need to look up. We don't need to look down. We can look right here on the chart, right here in the volume, see where the level is at. Okay? So right now we know a few more things just for more information that we have. Prices are coming down. Volume is increasing as prices are coming down. So think of it like this. All right, if you post something on Facebook for, let's say you got a fridge for $100, right? How would you know it's getting cheaper as you're pricing the prices down? Because you're like, oh, duh, it should be getting, well, not necessarily. There's scenarios where it doesn't. But in this case, this market seems to be getting cheaper. Prices are coming down. More people are interested as prices are coming down. Okay. So this is essentially getting cheaper. So we are still in a bull market. Makes sense? Because if prices were coming down and it was not getting cheaper, this is a bear market. Okay? This is still a bear market. But right now we're in probably a bigger bull market or something like that. Just by reading the volume, just by seeing that. Right? So let's see what's next. And what I use for entry, I just make it, if it's above this volume moving average, I just consider it a high volume candle. That's it. And I use that, right? So I wait for there to be a high volume candle, and we will wait till we get a decent one. So that one's above, right? And let's see what happens on the next candle. So we take the low of it. In fact, here's another high volume candle. So look at that. We have two high volume candles back to back. Okay. In fact, this kind of area here, this entire area here, I'd say is a level. We've got high volume here. So I'm willing to bet that we do push past this resistance. I'm willing to bet that. The thing is, how much am I willing to bet? That's the thing. Maybe just below this candle, because if we continue lower, remember, like I said, if we continue lower here, that's going to say a lot. So I don't want that to happen. But this is good risk reward. I think so. So buy. Stop loss below, just below that wick. I mean, very tight, right? Let's see what happens. And we probably would have gotten stopped out, but the way that the replay does is it didn't close, so it doesn't get stopped out. But we'll get stopped out. Okay. Now we have even more volume. The lower we're going, this is even more volume. So this is a level. It's holding. It's clear it's holding. There are people here, right? And we're starting to see back to back higher volumes come in. Okay, now let's see what happens. Are we going to hold the low, or so? No, not yet. Still more volume as we come in. And see, volume is still increasing as we come down. Look at that. So perfect capitulation example here. Okay, this is an example of capitulation. Capitulation essentially is when you are coming down into a level, shorts are getting out of their position, so they're buying, okay, and also normal buyers are buying. And what actually happens is it slows the momentum, but the volume's increasing, right? It slows the momentum. Let's see if I can pull up the auto draw here. Here's price. Okay, what's actually happening is the amount of people interested is slowing the momentum, and at the same time of that slowing the momentum, eventually it's going to turn around. Then there's going to be double pressure. There's going to be people buying and shorts covering, buying and shorts covering, and then volume can drop off as we come higher. But that's essentially the case. Okay, so yeah, we've been above the high volume moving average, right? So this is still high volume, so that's good. So yeah, and volume is still picking up here. Okay, now where are we going to get risk to reward? Because capitulation means we're at a level, and capitulation means whoever is capitulating, like shorts, right? Whoever is taking the money here is expecting to lose 50%, or they're expecting to lose a lot more than they're willing to hold on to. So they're selling their position. So we could look left and find that out. But I want to leave it unbiased. Let's leave it candle by candle, because I think this is important. What if we don't have that? What if we don't have the ability to look left, right? So let's keep it here. Okay. Essentially what I want to look for now, I'm fairly confident we can get good risk to reward anywhere in this area. So if we ever come back down and retest here, I'd like to just try it out with the type stop, right? Because if we come back down and retest, it should immediately reject. We shouldn't continue lower. Sometimes it does continue lower, so that's what I'm saying. We want to use a tight stop. So let's continue here. See what's going on here. Volume's dropping. Look at that. So volume dropped off, and prices stayed sideways. That's interesting, because if volume dropped off, prices should actually be coming much lower, right? You got to think, because if we've got the same amount of supply and we're wanting to sell the supply and volume's dropping off, we might actually want to reduce the price to keep up with the slowing demand, right? To maybe bring demand back up. So that's essentially what happened. Prices came down a little bit. So can we get even lower prices? No, we could not. But look at this. We squeezed any sellers that were here. We squeezed them, okay? Because or any lack of buyers here is now done for. We now have more interest. So this is a place for good risk to reward. Look, okay, we came back down. The low volume brought the prices down. And with this high volume bar, we took out this low volume event here, this pullback. We took this out. So I think that's fantastic, right? I think this is very bullish. Bullish, right? So how can we get good risk to reward on this? Okay, let's look. I mean, we could wait, but essentially, I don't think there's going to be much to wait on this, really. I mean, we gapped up. We've came all the way down into this area. And look, we even rejected here. Right? And closed up here. So clearly there's interest. Clearly there's pressure. Volume says it. Let's try for tight risk. Okay. I do not want it to go below this candle here. Okay. We don't want that. So let's see. Especially if we want even tighter risk, I really don't want it below this candle, right? This high volume event candle. So let's see. Boom. Not bad. Okay, so this is where we might start to be, oh, let's take the money, let's get crazy. Oh my God, it's working. This worked, let's take the money. You start freaking out. You need to get that out of your system, okay? Because when something's working like this, guys, this is where you need to be stoic. You need to be, okay, let's focus up. How am I going to get bigger in this position? Because, guys, like I said, if market's only trending 20% of the time, 80% of the time, they are ranging, and we finally caught something that is great, I want to figure out how to get bigger in this and absolutely milk every drop out of it, right? I'm not worried about taking the loss. I'm worried about sticking to the strategy, sticking to the plan. So this is going to be a fairly longer video, but just stick with me. Let's see what we got. So high volume, and look, still, we've got another one here, okay? Another one that's above this 20 moving average. So where am I going to move my stop, right? Because I don't want to fail this candle, right? The amount of volume that we still have, since this is pretty good amount of volume, I don't want to fail this candle. I don't want to at all. So let's just move our stop there. Very good. And in fact, let's add to this position. I think that's fair. Because if we're going to be able to add and have it be somewhere break even or relatively tight risk on this second position, I'm 2 positions deep now, and the risk is extremely small. This is what I want to aim for as a trader, right? So we are barely break even, but I think this is good. So let's see what we got. Okay, volume's dropping off. We're staying sideways. That's to be expected. Volume is still dropping off as prices are coming down, right? So remember, if volume drops off, guys, prices need to come down. You have to understand. Or if we're in a bear market, it's different. Prices need to come up. But this is a bull market. We verified that earlier with prices were coming down, volume was increasing. So right now, we are looking for volume. Where would volume be? Okay, volume is probably going to be in these 2 candles, in this area here. Okay, and it even might be right here at previous resistance, but I still am going to hold on to my tight risk, guys, because that's what trading's about. Trading's about risk to reward. It is not about moving my stop right now because, oh, it's going to go back to resistance, or, oh, it's going to this, or, oh, it's going to that, right? It's not what it's about. Okay. In fact, what I probably should have done was I probably should have moved my stop to this candle here, right? Because this one was actually above this 20 volume moving average. I probably should have moved it there, right? But it didn't click at the time, so that's that. But we'll just say we're still in our position. I want to make the same risk, so yeah, that's about the same. So we'll just widen this up so we can kind of just see. Okay, so right now, this is still bullish. Don't think it's not. Volume's dropping off and prices are coming back down. So we're just looking for volume. That's all we're doing. And volume could very well come in right here at this gap. It could come in a lot of places, but we know for a fact where volume is going to come in, which is in between these 2 candles, right? But risk to reward is here where I don't want to make it wider, right? So let's see. Oof. So we probably would have got stopped out. Let's take the loss. Okay. And let's see what we got. Let's keep it moving. Ooh, volume. So look at that. Volume actually dropped off, and we didn't go lower now. We stayed fairly sideways. I think that's excellent. I think that's fantastic. We could actually explode here and rip. So, see, I have a conclusion, right, of I'm predicting that volume is about to come in the market. I have a great place to get risk to reward. Look at this. That's fantastic risk to reward there. Is it not? I think that's great risk to reward there. I think that's great. So let's try it. Let's see what happens. Because volume, it seems like volume's going to come in. We had a change. Volume stayed nearly the same. It's just a little bit lower, nearly the same, but prices are sideways. We could pump here. Let's see. Hey, that's something. But I would have gotten stopped out, so let's just say we got stopped out. Okay, let's see what we can get. There we go. There's some volume came back in, and we are at resistance here. Okay, so how am I going to get a tight stop? Okay, where am I going to get a tighter stop? Probably somewhere here, right? Probably somewhere in this area. So let's do that, because we still have this candle here that we're going to be protected by, right? This green one right here. So have this one that's still fairly high volume. In fact, we've got this other one as well. So I'm going to say I want to get, we are near this area. Good risk to reward here. I'm going to try it. More risk than I would normally take, right? Little not, it's not tight enough, but let's try it. Okay. Let's keep going. Good. And wow, yeah, it just would have barely stopped me out. So let's get stopped out. And let's try and get back into this position now. Okay. So I want to get back in. I want to get my stop loss below this candle. Let's try it out. Volume drops off. Okay, and this one was actually above the moving average for the volume. So we'll continue here. Higher volume, and we're still good. So we're, in this case, we're still protected here. So let's see. And basically, all we're doing is just waiting for another high volume candle. We're just waiting. We want to see another level, right? Either fail or we push. If we push, I want to add. That's exactly it, right? So we'll see. So here we go. We've got a candle here that closed inside this bar. Higher volume. Okay, I could add to this position right now and get tighter risk. See, that's pretty tight risk. I mean, we are this close, this low, and now we're in two positions. Guys, that's don't think I did anything wrong here. This is great. I'm telling you, this is fantastic. We just got tight risk. Let's see what happens. Boom. So not bad. I mean, we did more or less gap down a little bit like that, so that's okay. Let's see. We are this one is above the 20. Let's continue here. Wow, very low volume on this pullback here. Why would that be? Let's think about that. Why would there be fairly low volume and we moved up? There's no sellers. Is that right? Or is there no buyers? We got to think about that. But either way, this is another place to get tight risk. This is an event, right? When we have a high volume, low volume like this, we could probably get tight risk here. So let's try it out. Good. Yeah, so we were lacking. That was an imbalance of supply and demand. We lacked. And I think this is good. I think we should add to this trade. Keep our risk fairly tight here. And let's see what we get. Okay, let's add this trade. Move our stop up like normal. See what we get. Boom. Took me out. But that's okay. We came back down. Look at the volume on this. Fairly still close to this area here. Let's try it again. Try and get that risk over here maybe a little bit. Okay, let's go and add to this. And see, I'm adding into the winners, just letting the losers die, right? I never want to be averaging down. Continue here. I'm going to add, move the stop up. Very good. I'm going to add to that, move the stop up. And eventually you're going to get to a point where you're comfortable moving it to break even, or it gets moved to break even. So that's the thing here. So let's continue. Can add to that, move the stop up here. So we are green now. And we just wait for another, I think, no, the average was still above that. So we're not going to mess with that one yet. Wait for a, there we go, that one's pretty good. We'll add to that, move the stop up. So you can see now we've made plenty of money doing this this strategy. In fact, this is where you kind of need to decide what's going to be my max risk on a trade, because you can get so positioned into a trade adding into your winners like this that it might actually be too much risk, believe it or not, because things can happen overnight, which this is good for intraday trading, believe it or not. On the daily chart, you kind of don't want things to happen overnight, then you gap down. It's like you get absolutely destroyed because your stop loss gets wrecked overnight, you know. So you definitely want to have a max position size with this kind of trading. But for this, in this case scenario, we'll pretend like we don't. But you probably do, right? You probably do want to max your position size. So let's continue here. We're just gonna wait for a, there we go, we got stopped out. And we'll just wait for another candle. So we dropped off, got a low volume here, more or less stayed sideways. So guys, this just still screams bull market. We'll just wait. This might be a place to get tight risk. So, but no, it'd be actually pretty far. So let's not mess with that one. Here we go. That's pretty good. Yeah, we can do this one. Let's try this one here. There we go. I like that. So, okay, the volume is actually above the moving average, so that's good. Let's add, move our stop up. It's a little wider than I'd like. We probably should have waited a little bit more, but that's okay. Let's see. Okay, let's add to that. Move our stop up. No volume, pull back here. Okay, let's add to this one, move our stop up. Very good. Add, move our stop higher. Okay, we're lacking volume here. I don't love that, right? So this is going to be a scenario where you're going to have to trust your strategy or your stop. If you're willing to just give up these gains and let it get stopped out, like I'm willing to do right now, you should come out great. But a lot of times we're not going to want to do that. We might think it's going to, keep coming down and we might sell our position, but I encourage you just stick to the strategy. So let's see. Barely got stopped out there. Nice higher volume candle. And look, the risk isn't much. We'd actually be moving our stop up. So if we add and move our stop up, I want to do it. Let's do it. Let's do it. Let's add, move our stop a hair up. Yeah, we would have gotten stopped out there. So let's take that and continue here. See what else is going to happen. Okay. Nice high volume there. See if we can get some tight risks, which right now, because really guys, you want to focus on the first two entries, because those are the ones that are going to be the most important to get you to break even. You really need tight risk on your first two, I'm telling you. You don't want to start your trade with a wide risk. You're really going to have problems doing it like that. So I'm trying to get tight risk right now. Isn't really. Yeah, so here's a good place to get tight risk. We got high volume here. A little bit of wick there, so we could bet that it's not going to fail this wick. And it failed. Pretty bad, actually. So let's see. We got high volume coming down. So that's interest as we're moving back down. Yeah, not sure where I would get tight risk either. I mean, we could get tight risk around this gap here, but let's just wait and see. Here we go. Yeah, we can do this risk. I think that's tight enough. So let's continue here. Yeah, we would have gotten stopped out. So let's see. See, I'm just looking for places to get tight risk and matching it with volume. And that's what's really going to make you a successful trader, is getting good risk. I'm telling you, good risk to reward, adding to your winners, minimizing your losses, guys. It nearly has nothing to do with strategy. It has everything to do with maximizing your wins, minimizing your losses, right? So we can possibly, yeah, that's a little too wide. Um, I'm gonna make it. I'm gonna make about that much. Really, it's a little too wide, but let's see. Yeah, okay. This is good. This is good risk here. I think this is perfect. Yeah. Okay, would have gotten stopped out. Let's re-enter though. I think this is still a good risk. Okay. Let's re-enter. I think this is still good risk. Ooh, we barely would have gotten stopped out there. So let's get stopped out. We'll have to find a place for tight risk again. Let's see. This amount of interest. We passed these highs here. Yeah, we really need a better place for some risk. Here we go. Let's try this. Okay. We can still get tight risk here. Now, look, still, I mean, this is good. I think this is good. Can still get pretty good risk here. That when we would have gotten stopped out. So, yeah, in the ranges like this, like I said, it's gonna be pretty choppy, but more or less, guys, that's my trading strategy. If we look back and look at our profits, that's basically it. So I know this video has been long enough now, but we can kind of see, right? What are we doing? Adding two winners. Yes, that's right. And we are what? What else are we doing? Letting losers lose. Right? Let them go. Don't get stopped out. I always use a stop loss, guys, but more or less, that's why you should use volume. Really, it really is gonna help you get a level and see where you're gonna be able to get tight risk. Okay. Now, let's look at one chart. I want to see something. Dada, DADA. And we're just gonna read the volume here. See what's good. See if we are on the daily. Let's even go to Renko. Renko's actually Renko's really good with volume. You mix Renko with volume, it's very good. So we're coming down, and as we're coming down, we actually have more interest as we're coming down. So if you can see in this entire kind of area here, there's a level here or some sort, right? So that's good. Yeah, and it looks like it. I will say though, this is concerning. This aggressiveness to the downside, and this high volume candle here that we were pushed lower with. So this is bearish exhaustion, right? And basically what exhaustion is, if you guys don't know, exhaustion is a continuation signal, right? It's force, and then you get a relaxation of force, then you get force again, and so exhaustion is basically a continuation signal. We do have this nice volume here, though, I will say. So I'm gonna make a prediction. Yeah, I'm gonna make a prediction. Let's look at the weekly. What about the monthly? Big volume here. We already kind of retested this resistance by this candle here. Or this wick. It already kind of retested it a little bit. And the day's basically over. I think we continue. I really do. I really do think that. If we I would most likely try and get risk somewhere in this area. Oh, not that area, but somewhere here. That'd be a great place for risk, just because this candle here is fairly high volume. I'd like that to get some good risk there. And then, yeah, push back up to the upside. A lot of these sellers here are going to be capitulating, it looks like, and they're wanting to get out. Yeah, the difference here is that we don't have, it doesn't look like it's actually getting cheaper. It just looks like capitulation to come back up and sell more later. So I would still be concerned with this overall. But right now I think this might at least come back up into the gap. Right? At least come back up into here and eat some of that away. I think that's a good idea. So yeah, if any place to get tight risk intraday, let's see like intraday what we could have gotten. How would we have done this intraday? Yeah, we could have once we saw this candle open here, this green candle, got in with tight risk there and planned on that. Could have done that. That was around 8:30, right? Yep, that was opening 8:30. Even here, once we saw this, oh, that was yesterday. Wow. So yeah, we had big volume come in, and then yeah, we just failed to break lows of high volume every time. You know, that's very important. Like if you just track it up, you know, like this candle had large volume, we didn't break the low of it. Then this candle had large volume, we never broke the low of that one. This candle had large volume, we never broke the low of that one, and we just kept hitting these high volume. And this candle had fairly lower volume, you know, as in we went to the pullback, we just kept. So this would have been a monster adder to add into and continue going. That would have been very nice there. Um, yeah, you probably would have gotten stopped out up here somewhere. Let's see. Yeah, you would have gotten stopped out somewhere over here. So this wouldn't have been much of a concern. But yeah, this was a monster today. Very good. Went from 150 to 190. That's fairly good. Okay, that's data for you. But yeah, it looks like looks like we should continue here. Push up higher. Yeah, I'd definitely say these sellers in this gap are capitulating, and we're gonna see them at least take out this gap, or at least get into it, right? Get into it, eat some of this gap. So yeah, above $2 looks fairly good on data in there. Okay. All right, guys. Thanks for watching. Hope you guys enjoyed this longer video about how I trade my strategy. If you did, leave a like. Also, don't be afraid to join the Discord. It's the cheapest paid Discord around. $1 a month, guys. We'll get you all the viewing you can like. You can view all the stuff that we talk about and just be part of a community for $1 a month. Okay? Peace out. Have a good one.